Okay, and then on to the provisions around debt. And the first thing is that throughout the Income Tax Act, we've had a bit of tidying up as far as the language is concerned around debt. We had lots of different words that were used, and the thing is that if we mean debt, now we're going to say debt. And so you'll see some of the terms in the Income Tax Act have changed, just so that we use one common term whenever we mean something called debt. But the biggest changes that are coming through around debt are these provisions dealing with debt reductions. We've seen over the last few years some very complicated tax implications arising as a result of debt reductions. And the simple ones being where you have a loan that is waived, for example, and it's not enough that there's a donation that's taken place, but there's potentially been capital gains tax implication under paragraph 12.5. Now it seems National Treasury have indicated that those implications under paragraph 12.5 were never intended. They didn't realize that the tentacles were going to extend as widely as they did. And so they've taken this opportunity, not just because of paragraph 12.5, but also because of the number of businesses that are under business rescue, etc., and the debt implications that happen there as well, and the complex tax implications. They've taken this opportunity to streamline the treatment of debt reductions. And you'll see a number of provisions having done away with. So Section 84M, which is a recoupment provision, deleted. Section 21A, which talks about reducing your assessed loss where a debt has been compromised, that's been deleted. In its place, we've got Section 19. And so Section 19 is really the key provision in the Income Tax Act that deals with debt reduction. So if you want to see what is the tax implication of debt reduction, Section 19 is the provision that's going to give you that information. All right, so that's the key provision. And the equivalent of Section 19 as far as capital gains is concerned is paragraph 12A, which is quite similar in many respects to Section 19, but dealing with capital gains specifically. Okay, so we see paragraph 12.5 has been deleted, various other provisions deleted, some of them changed, etc. So the key thing is that coming out of this, the new provisions around debt reductions, Section 19 and paragraph 12A. And they are going to be effective from the 1st of January 2013 and applying for years of assessment commencing on or after that date. All right, so this is coming in probably for your next lot of years of assessment that are coming around. Okay, so it wouldn't have applied. We've still got the good old 12.5 in terms of the old years of assessment that are ending off, but these new provisions will come in for the new years of assessment.